Trade war. What can history tell us and what can we expect? First of all, what happens in a trade war fueled by tariffs? Well, we do have a historical example we could look at. After the 1929 bank crash, the US economy had gone into recession, heading towards a depression. And then the Smoot-Hawley Act was passed with significantly higher tariffs. US exports to Europe would fall from over $2 billion in 1929 down to $700 million by 1932. US imports would also fall from around $1.3 billion down to $390 million. Countries would enact reciprocal tariffs, so it is estimated trade went down by as much as 66% on a global scale. The Smoot-Hawley Act was aimed at protecting US farmers from competition as the world started to recover after World War I. Prices for farmed goods had been high during World War I, leading to additional loans to increase production. As the act was met with counter tariffs, actual trade declined and so defeated the purpose of protecting the farmers, who started to lose export opportunities. We also saw a reduction in consumers' willingness to spend money, which had a ripple effect. As global trade declined, it hit different countries more or less. USA felt it longer than, for example, Great Britain. France also had a first shorter depression, but would see other recessions later in the 1930s. One could draw parallels to the extreme nationalistic movement gaining power in Germany, even though the basis for that can probably be drawn from the hyperinflation Germany had in the early 1920s. Parts of why countries got out of the Depression was leaving the gold standard. That was true for Great Britain, as an example. In general, one could say that the world economy was in trouble and with tariffs that worsened an already bad situation. I do not think we can say the tariffs by themselves created the depression, but we can say they extended its effect. World trade would be reduced for a long time, and if we look at trade versus GDP, it would last well beyond World War II. I now think that everyone understands how tariffs work, but a short recap. A tariff is a tax on imported goods that the consumers or producers in the country will have to pay, and not the exporter. The reason for tariffs are usually to protect domestic industries from competition. If we look at the overall economy of a country, tariffs have usually not worked. We have rather seen an overall decline in the economy. Certain sectors can, however, benefit. Usually, when one country introduces tariffs, usually they are met with counter tariffs, as we are now seeing. So what are the usual progression when tariffs are introduced? Usually you add tariffs on one or several items, and the countries faced with those tariffs will retaliate by introducing tariffs either on similar or other products. And that is what we can expect this coming year. For example, China has put tariffs on US farmed goods like soybean, chicken, wheat, and corn during the announced tariffs in March. The reason is that China wants their tariffs to have a specific impact in certain sectors of the US economy. The US then added additional general tariffs and China has responded. So the trade war is in full swing. What impact will this have? We can look at the tariffs that were introduced on China during Trump's first period as president. The cost of those were mostly carried by US consumers. There were some winners, like the steel industry and manufacturing of washing machines, as they were covered by tariffs. The losers were the ones working in the import sector. Overall research would indicate that manufacturing jobs did not move back to the US during those tariffs. Exactly what impact they had is harder to judge by current research. Some estimate that US lost around $25 billion in revenues between 2018 and 2019. If we look simply at growth and inflation, we can expect that the current trade war will, even in the best case scenario, see an increase in inflation and a decrease in growth. The USA and China are the main actors now engaged in the tit for tat, but we can expect additional counter tariffs to be introduced over the coming year. Regarding China, it is likely they will try to divert products to Europe, and that could have a dampening effect on inflation in Europe. On the other side, the competition will increase if Europe is flooded by cheap Chinese imports. So the actual impact is very difficult to assess right now. It will also depend on what actions the EU will take against USA. Some actions will be taken. The most significant impact we see right now is, of course, the stock market. But also the oil price is falling. That is going down and will in all likelihood continue to be low this year. That can somewhat affect the expected lower growth, but it cannot stop a decline in this kind of a trade war. We can say more about the US situation than any other nation just because we have more data there. Several key areas will see an increase in prices, mostly electronics, but also other areas will be hit by higher prices. It is very unlikely that those jobs will move back to the USA, as the US will struggle to compete in the world market, for example, to assemble items like phones, computers, and so on. In the best case scenario, the USA will see some jobs moving back to the country, but they will lack competitiveness in the world market unless every other country will introduce tariffs against each other. So we can expect lower growth and higher inflation in general. Depending on what China does, the inflation in Europe or the EU could rise less, but that is by no means certain. The EU will be in a very difficult position for the near to the medium term, so I expect we will start seeing a diversification away from US trade. It is not impossible that increased trade with, for example, China could be a consequence. What is the long-term impact? That will be much more significant than the short-term impact. While many countries will start negotiating with the US for short-term relief, long-term, most countries will start looking for alternatives to the US market. That will not be visible in the coming 1 to 3 years, maybe 5 years. But after that, we will likely see a significant impact of new trade deals aimed at diversifying away from the US market. They will of course not leave the US market, but they want to find other markets to avoid being reliant on simply one market. Regarding the dollar, which in reality is the world reserve currency, we can possibly expect to see that decrease in value. That would be good for US exporters as their exports will become cheaper, but it will be less good for the US economy. The USA has a debt versus GDP at around 116, maybe even 122%. Should the US economy start declining, the dollar will become weaker and the market could start losing confidence in the currency, and that would have a major impact. That would, among other things, mean it would become more difficult and more expensive for the US government to borrow money. The dollar used as our reserve currency has been declining for decades, and it is now at the same level it was around 1994. The euro could benefit from this, but it is very unlikely it would in any way replace the dollar. What we can say is that in turbulent times, investors will aim for some stable currencies. Some research papers would indicate that less traded currencies might be the big winners. I think it is unlikely to be the Chinese currency, as their economy has been struggling even before this trade war, and it will most likely continue to struggle. What we can say with almost certainty is that growth will decline and inflation will rise, especially in the short to medium term. In the long term, it depends on what new trade deals are struck and how long this trade war lasts. A turbulent US financial policy means that in the long term, many countries and blocs will try to diversify, as we have seen before. A new trade deal usually takes maybe 2 to 3 years to negotiate, so it is that time frame we should be looking towards. A secondary good thing is that the oil price is dropping. That will have a direct hit on the Russian economy. And as the prices are heading down towards $50 per barrel for Russian oil, their economy will now face major and significant problems. This trade war will not really have any winners. It will for sure not be Europe and it will not be USA. USA having a general tariff against a country producing items where the US can never compete will only drive inflation. Europe will see a diminished US market, so much like China, it will have to find other trading partners or markets, which will not be easy. But when that is started, it is pretty difficult to reverse that direction. All we are seeing right now are really expectations. This is why we see the stock market tank, then on a rumor gain and so on. The real impact is still in the future, but the political decisions are being made right now. This is also true for companies and how they will react to this new reality. Finally, we have the consumers, which really drives the world economy. If they are less willing or cannot spend, that ripple effect could mimic what we saw in the early 1930s. That is by no means certain that it will go that far, but any predictions at this time cannot have high confidence because we simply do not know. What we know is that we will become poorer in general. It is hard to see any other outcome in the coming years. That is if the tariffs are left in place. What I think will have an even longer impact is this. The adversarial approach to foreign policy we see from the US will have some kickback. Like in Canada, consumers can start making other choices that will directly impact US businesses outside the actual trade war. Musk's approach has affected Tesla sales in Europe and that is likely to continue. It takes years to build up a company's brand, but it only takes some weeks to destroy it. In the long run, I think that the US soft power, which they have built up since World War II, could be one of the biggest casualties. At this time, nothing is certain, but if I would take a guess and we look back 20 years from now, I think the loss of US soft power will be one of the main factors that will dictate the pivot point we in the future will see that happened today. End of report.